So gold and silver are extending their sell-off on Monday. Now we saw a reversal of the parabolic rally last week with gold and silver hit multiple record highs before falling really sharply on Friday. Gold is now trading where it was trading almost $1,000 per ounce lower from that record high of just below 5,600, and silver has crashed around 35% in a matter of days. Now, there are a couple of factors behind this reversal. I think, firstly, this was clearly a very overstretched trade and was very much overdue a correction. You know, when we see a frenzied rally like the one that we saw in gold and silver, it's never going to consolidate sideways. Obviously, we had that catalyst at the end of last week where with the anticipation of and then the nomination of Kevin Warsh as the next Federal Reserve chair. And although he is expected to cut interest rates in line with Trump's views, he has previously criticized the Fed's balance sheet expansion programs, raising concerns that he will look to reduce the balance sheet and that could create liquidity issues. That's fueled a recovery in the US dollar. It's also raised concern sparked a sell-off in risk assets such as US stocks, such as Bitcoin, and also we're seeing the reflection of this also in gold prices coming lower, again in a reaction to that stronger US dollar. Also, another factor driving this sell-off in gold and silver has been the CME announcing that it will lift margin requirements. Now, this can force investors to factor in a higher capital outlay, denting speculation, again bringing prices lower. And then we've also got this idea of just reduced geopolitical risk as we've got US and Iran heading into talks, hopefully de-escalating the situation there. Oil prices have fallen quite considerably on the back of that news, again, which is pulling oil prices low, gold prices lower. When we see oil fall, that reduces the inflation or potential inflationary pressures in the wider global economy, pulling gold lower, which is the hedge for inflation. So lots of factors which have been driving this move and massive swings in the precious metal markets, which have actually, whilst they are typically known as safe havens, they've been trading more like cryptocurrencies over the past few weeks. Now, these massive swings in typical safe havens have actually weighed on the broader risk sentiment, with risk assets under pressure. We've got US futures pointing to a sharply lower open. Bitcoin's also trading down at 9-month lows. And this nervousness that we're seeing in investors is also being reflected in a renewed rise on the VIX, the volatility gauge, which is often considered a fear index for the US stock markets. And that's nudged up to 20, a level that most view as a sign of heightened market tensions. Now, looking out to this week, there's quite a lot as far as the US economic calendar is concerned. We've got ISM figures for services and manufacturing. We've got lots of jobs figures coming out, ending with the non-farm payroll report on Friday. Obviously, any geopolitical tensions and anything that Trump has to say across the week could also be driving the markets.